Welcome to Markets Now. I'm Michelle Rick along with Brad Kooima with Kooima Varilek. Grain seeing a little pressure here today while the livestock futures are trading kind of mixed in the cattle, but higher in the hogs. And Brad, let's talk about this cattle complex first off. Yesterday, we saw a little bit of a setback. I'm sure some of that was a little bit of this bearishness from the placements number on the cattle on feed. We tried to hold on to some gains this morning, but what's wrong there? Why are we seeing more profit taking?
Well, one thing about yesterday also that I think is notable, Michelle, is we lost about 10,000 in open interest yesterday.
Okay.
So we saw a mass exit from the longs. Long speculator doesn't like uncertainty, and certainly, when we were throwing that Ukraine news with the bombing of that terminal, started in the feeders, washed over into the fats, yada yada, a lot of it. And I wondered if maybe there was even some spread unwinding because there were some oddities to, I thought, some of the way the spreads acted, and I suppose some of that maybe you could trace back to the cattle inventory report, especially lowest cow herd in 52 years, right? And I remember a year ago when we started to talk about that same thing, I was a little frustrated with the fact that some of these algos, I think, and some of these long-term traders who maybe don't know the difference between a steer and a heifer decide, well, let's buy it as far back as we can. So you saw that yesterday, buying next June and next August, and leaving the front months alone. So a lot of spread activity, but I think a lot of the longs went to the bank yesterday with the way the open interest came down.
Okay. But we had a higher cash trade last week. We had higher box beef values yesterday. And you definitely have the lower corn market working for you. So we're still down.
Yeah. Yeah. One thing about yesterday too is the placement number was bearish. Of course, I think everybody knows about that by now. But I'm a little surprised that we're lower. Not going to lie. I do like the way the spreads trade with the forwards leading us here a little bit. August, the strongest of any of them. We're at a big level, and to sustain it, with an engine that runs this hot, you have to have a lot of fuel. Bull markets require bullish news. So some of that is probably it. Don't forget, it's July. This is not the seasonal time where we often are great. We're still going to be sloppy on the boxes for a couple of weeks here, probably. But cash market is still king. And the territory I sit in here, I got a quote stuck on my desk over here. The beginning and the end of all markets start in Iowa. And people can argue with me if they want, but I think that I'm right. As current as we are in Iowa, the lack of supply of fed cattle at this time of year when we normally are swimming in these long fed calves, they're not there. We are more current than we were in 2014 in this area. So I just don't think the Packers got much leverage. And I'm encouraged by the fact that it seems like there's a few less formula cattle around there, which is forcing these Packers to have to play ball in the cash market. And that makes a big difference in my opinion.
So do you think we'll be higher by how much this week?
Ooh, steady is kind of a first step, right? Okay. Let's go. Okay, so I got 190 last week. I think we'll be fully steady at 188 to 190, depending on the kind. Packer here is searching for grade. We're selling these calves so early that's still kind of a challenge, which is bullish, right? So I think we'll be fully steady. I'm hoping the South catches up a little bit with us. Basically call that trade 180-ish last week. I'm hoping they're a couple higher at 182, and maybe we'll be steady-ish at that 188 to 190 figure.
Box beef, though, higher yesterday. Is that a function of the reduced kill here, or the Packer cutbacks?
We did have real, after all that, threatening of kill cuts, felt like it's gone. I've heard that for months. There actually was a little kill cut last week. There was a plant that was dark on Wednesday. There was a couple of regionals that lost a couple of hours. The Saturday kill, not nearly as big. Revised a couple of days slaughter back a couple 3,000. So yes, I think some of the strength in the beef is that, but I happen to notice the comprehensive beef report this morning, which includes beef for overseas shipment, and a little over 10% again, beef going overseas. That's a tremendous number. I mean, Michelle, you and I have done this a long time. For years and years and years, it was 5%. Now, yeah, it's not always that good every week. I get it, but I still got to think and still got to contend that the demand, both globally and domestically, is still very, very good.
Yeah. Let me go back as well to something that we were talking about earlier, which was cash trade and negotiated numbers last week over 86,000. That certainly was encouraging, wasn't it?
Well, thank you for bringing it up. I'm an advocate for that. That I believe wholeheartedly that the cash cattle, the strength of the cash cattle is influenced greatly by the number of captive cattle, and so it's, to me, it's again obvious proof here the last while when a packer has to negotiate for more cattle, typically the cash cattle will go higher right along with that. So yeah, that's the sword I carry within the NCBA world too. So it's you can't get all the PhDs to agree with me, but whatever.
Yeah, I wanted to mention it because we've been kind of trailing lower in terms of those negotiated totals the last few weeks until last week. Hog market, man, we're up triple digit gains again here today. It seems like every correction gets bought here by the funds and they continue to add to their long position. But is this a function of the futures just being at a discount to this index and the cash continuing to move higher? I mean, is the demand really there?
Well, I guess for all indications, it appears like it's good enough now. My stomach keeps telling me, and indications too from it. We're talking about China, right? I mean, international demand. It doesn't feel like the old days to us here. Clearly, the funds have had this thing in a hammerlock. I think that the public probably got, I don't know, hamstrung is the right word. I think the public here, me included, got a little bit fooled, thinking that the after shock of Prop 12 would carry some negativity here after that July 1 deal, and maybe a situation where the public got a little bit too short based on that idea that there'd be a backlog of pork around, which doesn't seem to be the case now. Average weights are above a year ago now for the first time in quite a while. I don't think we feel quite as current as we did. You got a triple top here in the August hogs. Let's see what we do with it up against this 102 level. That would be an area that I think might provide us with some resistance, but they have been like a helium balloon. They are extremely outperforming my expectations by quite a ways.
You are not alone. That is true with everybody. Okay, grains, taking a little bit of a breather. Do you think we have enough war and weather premium put into these markets here, especially in the corn, or not?
Well, the people are going to argue with me, but I guess I think so. And you guys know I'm a cattle feeder, so I got a bias, right? I'm a farmer too, so I do raise corn, so I'm not completely the enemy. But demand for corn is poor. I thought yesterday, to me, had it not been for the Ukraine news, which of course is very important news, but if we were only trading weather yesterday, I think we might have been lower yesterday. The weather was more moderate. The forecast again this morning is more moderate than we went home with on Friday. Yes, it's going to be hot for a couple of days, but increased chances of rain, crop conditions stable. The long-term stuff for August looks a little more less inflammatory. Enough weather premium is a tough question. I guess, we're 80 cents from where we just were. I guess we've thrown a bunch of premium back on it. In my view, yes, but especially on the beans, guys. I mean, up above $14 here. I mean, if I was a hedger, I heads up, okay? I don't know where it's going, but up at these levels, if it does rain in August, even with the tight acres, I think you're going to have enough beans left over that $14 will look like a pretty good price, in my opinion.
Yeah, and 1450 and right in that area is the contract high. So good Lord, let's be rewarding the market here a little bit. Did we see maybe a little bit of hedge selling or a little farmer selling come in here? This isn't just all profit taking here today, is it?
I don't think so at all. I think yes, you've got areas that guys are confident they're going to get a percentage of their crop. Things are looking okay. Our area right here, things look good. You're getting these people turning around here where they dare to sell a little bit of new crop, and there's certainly some of that going on for sure.
Well, it has been a volatile market here the last few weeks. So hopefully
it is one for the books, and I've been at it for a while. Yep.
No doubt. All right. Thanks for joining us, Brad Kooima with Kooima Varilek. That's Markets Now.